Well, thank you very much, Madame Lagarde, Christine, for this very inspiring speech, which covered really a lot of ground that we can discuss here. And I will also give a chance to the audience to ask questions later on. But perhaps to kickstart the discussion, let me reflect on 2 or 3 points that you made. And I think the first one is really, you talked a lot about the risk and the feeling by some that feel left behind, and that do not think that integration is to their benefit, nor do they think that technological change is to their benefit. And you talked a lot that we have to address this issue, and think about what can be done to address this issue. Now, we've seen already a few elections where voters essentially have said, in particular in the United States, well, the way the current political class is addressing this is not enough. I mean, we don't believe that this is enough. And instead, we vote for someone like the US president, who promises a different recipe, a recipe based on protectionism, based on perhaps even slashing the welfare state, but protecting the domestic economy through basically tariffs or other things. I mean, that's at least what he has been promising and discussing, and being tough on China, obviously. And so I think the contrast is a bit the European Union, where we, of course, have a very strong welfare state, much stronger than the welfare state in the United States. And where still that doubt is there. And so I guess my question is to you, how much more do we need to do, really? I mean, is it enough what existing political parties put on the table? And if I may, your suggestions, better education, I mean, it sounds in some respects a bit like the old recipes. I mean, don't we have to go a bit further and do a step change in addressing the concerns of those citizens?
As I said, if there was a magic recipe, we wouldn't be in the situation we're in. And it's one that we have lived with, because, when I was curious to see for how long we have been preoccupied by those transformation of our economies as a result of either technological changes or modification of the supply chains. And we have had that for a long time. The first agency that was set up in an advanced economy to actually address the issue of retraining and softening the burden of those who were left out was set up in 1962 in the US. So it's not a recent phenomenon. It's one that has certainly been amplified, and the perception of which is much stronger. Amplified as a result of this relatively long period of slower growth, which clearly makes everything more difficult, which allows for less redistribution, especially when you think in terms of net growth. But that explanation would not be in and of itself enough, because when we look at the recent phenomenon of sort of rejection of the established principles, rules, and solutions, the UK, for instance, or the US, those are two advanced economies where growth has not been that bad, actually, compared with the rest of them. But it's also not for the UK, actually, because inequality has plateaued and slightly reduced over the course of the last few years. But certainly in the United States, you have had a significant increase of inequalities. And that probably compounded with that slower growth than previously, has certainly amplified that feeling of exclusion as opposed to inclusion in the US population. I think when you need to go micro as well. You can't just look at things on a macro basis. But when you look at a sub-national or sub-aggregate numbers level, you see that a lot of those falling prey to those restructuring and those technological innovation consequences are generally concentrated in certain areas. And whether in the US it's the Appalachian, today it will be Wyoming tomorrow, and there will be other places in the world that, I was mentioning the textile sector in Bangladesh, for instance, in some regions there. So it requires those sort of broad-based programs of education, training, retooling, But it also requires to go more granular. And we have looked, for instance, at 2 areas that are a particular brake on workers' mobility, which would be one of the responses to the sentiment of being left out. The first one is housing, because you have generally this sort of vicious cycle where people live in an area that is affected by structural changes, lose their job, the area becomes less popular, prices of housing goes down, people had a mortgage, and very quickly they are, quote unquote, underwater, the house is no longer sellable, the banks will foreclose. So housing particular policies in order to alleviate that burden are necessary. And second, the health benefits, which in many advanced economies follow the employment situation, and a little bit more time after that, but not much more. So, yes, it sounds like old tricks, but it has to learn from the old tricks, elaborate, go further and deeper. You know, we need to look at what other countries have done. Certainly the Singapore system that I was referring to is a very interesting one, albeit, you know, small scale, probably much easier to implement, particularly in a very wealthy economy as is Singapore on a per capita basis. If you look at the flex security system that has been implemented in Denmark, you have something very different, and yet that is quite effective as well, which is a combination of 3 components. One is, well, 4, I would say. And that one is not often mentioned. The requirement in any circumstances of a long notice period, so that people can actually prepare for the change. Second, the flexibility in the sense that employers can readily, subject to that notice, hire and fire. But it's combined with 2 things which are equally important: a fairly generous unemployment benefit system coupled with active policy, labor market policies that require the people to actually go and seek out new jobs. And it's the combination of those 4 that actually produces the sentiment that those affected by changes are not just left to drift on their own with a declining value of housing, no benefits and no support. You could add to that other things as well. Clearly, a better redistribution system can be envisaged as well, so that the excessive inequalities that I have mentioned earlier on are addressed through those redistribution mechanisms. For instance, in the case of the US, we have now for at least 3 years recommended in our Article 4, which is the annual review of the US economy, that minimum salaries be increased, and that the earned income tax credit be not only maintained but improved and increased in terms of volume. So those are mechanisms that can be used. I should mention, because I was just in Germany and I discussed that with the German authorities, the dual educational system that is used in Germany in order for both the employee and the employers, through generally a good co-determination system via the unions, that actually allows for that regular training both on the job and through educational systems.
Okay, perhaps since we discussed risks, you talked about the risk to the global economy coming from the rise of protectionism, populist political risks. But I noted when you talked about the risks, you did not mention China at all. And I wanted to raise an issue that is not European before we can come to the audience that I'm sure will have many questions on the European economy, on Greece and so on, but really let me ask you first this question on China. You mentioned China as a driver of global productivity growth, but of course that's not the way many would see it, and I think the prism of protectionism, of course, has to do something with China. But since you are representing a macro financial institution, I really wanted to ask you also about the potential macro financial risks coming out of China. China, country with a lot of debt by now, with a very big financial system, shadow financial system also. with relatively slow progress on reforms as regards state-owned enterprises. I mean, don't you see this as one of the risks we should be talking about next week in Washington? Perhaps it was a deliberate omission in the speech, or how do you see the transformation of the Chinese economy and its implications for the global economy?
Well, first of all, I would observe that China has undergone already a massive transition. When you look at the current account of China 7-8 years ago, and you look at the current account of China today, it's just a massive reduction from 8 to 9%, to 2-ish at the moment. So, coupled with that, and to actually support that significant transition, China has been moving and is in the process of moving from a very sort of export-oriented to a much more consumer-based, from a very highly driven, from a growth that was highly driven by investment to an economy that is more geared towards consumption. And it's a process. It's not something that happens overnight. And we are seeing it in the numbers, gradually. Consumption rising, investment declining a little bit, not enough based on the recommendations that we would like to see enforced. But China is also, it's not just a big economy, it's a political system that operates according to its own cycle. And as you know, we are next October, when the major convention or congress will take place. Before such time, will we see major changes? Probably not. Will we see the continuation of the current series of reforms that are underway? Probably so. Will it transform the state-owned enterprises massively overnight? Probably not. Are we seeing a gradual reduction of production in the steel industry, in the coal industry? Yes, it is happening. What clearly is also at stake is what you mentioned, which is the financial sector of China, and the fact that the shadow banking, large portion of which is under state control, but not under supervision as it should be, is growing much faster than the controlled and supervised financial sector, by the clip of about 30% per year. So that's a real concern, and one over which clearly the central authorities are trying to control and to address and to remedy. We believe that as long as they are very aware of it, which they are, determined to address it in their own way, at their own course, and given the volume of munitions that they have available, it's a mechanism that should follow its course without major disruption on the economies.